Welcome to What a Week. And every week we say what a week it's been, but it really has been a what a weekish week, because it's so much information. With us today is Mia Kruger from Kruger International, Joanne Baynham from Sterling Private Wealth in Cape Town, Nick Kunze from Sanlam Private Wealth in Johannesburg, and of course, Bronwyn Nielsen from the Nielsen Network, our host. I won't say gracious host because that annoys her. And I'm Lindsay Williams from strictlybusinesspodcast.com. Now, I've gotten a bit of agenda, so I have to look at my notes. I'm looking at it in no particular order. I'm looking at the Rand, which has had an extraordinary run, and also the South African bond market, which has followed the Rand naturally. We've had a company called Coinbase, which is now bigger than British Petroleum, as listed, and we'll talk about that. And Nick will tell us about that because he understands the business model. We've got a gangbuster earnings season from US companies, particularly S&P 500 companies. We've got something called NFTs, which I'll talk about later and maybe have a bit of a rant. We've also got a feature on secondhand shoes selling for $1 million, and also something called Ripple. Now I'm going to start with you, Mia, today, because I want to talk about the Rand and the bond market. Because in conventional wisdom, the Rand should depreciate 6% per year against the US dollar, but suddenly it's gone from 1935, 13 months ago, to its current level of just over 14 to the US dollar. And it's all to do with the fact that inflation in South Africa is only just above 3%, and inflation in the United States is 2.6%. So the differential has compressed significantly. And this is significant for the South African economy, I think.
Absolutely, Lindsay, you've got that spot on. And I think if you consider the fact that we are offering fantastic yields on our bonds, we've seen that we've had a net outflow in the equities and the bond space up until now this year, but it's a margin compared to what it was last year. It's much smaller. So we've seen appetite, and we need to remember that even though there's an outflow net wise, there's still massive numbers traded, bought and sold. So it does seem that South African Rand is in favor. We've heard that emerging markets has been in favor for quite some time with foreign investors, and I'm very happy to see that the Rand is actually benefiting from that.
Mia, can I stay with you for a moment? So with emerging markets in favor by foreign investors, there's also this huge debate about the uneven recovery from COVID-19 and the IMF weighing in with their concerns. We had this discussion last week. Is this not something that is unsettling for investors across the board?
Well, I think most definitely when I consider it, it's unsettling. As I mentioned in the previous weeks, there's a big difference between the recovery we're seeing with vaccinations taking place in the developed economies compared to the developing economies. And I mean, we just see that where many nations have already inoculated more than half of their population, where South Africa, we haven't even started. So, that is going to be a big differential when it comes to economic growth next year and on. But the big thing is, because we're all coming from such a low base, it seems like even South Africa is going to surprise to the upside when it comes to economic growth this year. And that is definitely positive for anyone buying from very depressed levels. And I think that's sort of the narrative that the investors globally are taking.
Joanne, let's talk about US earnings season at the moment. I know you don't look at individual companies, but you can see the general theme. It's been extraordinary this week, because every single day, almost every single hour, we get a new high on the S&P 500 because of earnings. I think because of earnings, obviously stimulus and low interest rates, which are a continuing theme, but earnings have been really good, Joanne.
Yeah, earnings have been fantastic, but I think it was expected by the market. I think what I'm finding much more interesting in the last week or two is the change in leadership again. So, if you look at US treasuries, after the retail sales numbers we saw yesterday, and after the surprise on the inflation number, one would have expected US treasuries to be now north of 1.7%, but it's actually falling to March lows of 1.5. So I think what's happened now, we've got fantastic results, but a lot of it's in the price. So what you're seeing actually at the very beginning is a change in leadership back to technology companies again. But Lindsay, you talk about the new all-time highs in the S&P. It's nothing compared to the sideshow we're watching in current cryptocurrencies. It is, you cannot believe what you're watching right now. There's a cryptocurrency, I'm sure you guys have probably heard of it, called Dogecoin, okay? Apparently Elon Musk has tweeted about it. This company was, well, crypto was created in 2013 as a joke. Okay, just remember this as a joke. It's now worth $23 billion.
Nice joke.
Yeah, but I mean, we are seeing some crazy numbers. As investment professionals, we're looking at the investment markets like the S&P new highs. That the real interest is happening in cryptocurrency right now.
And Nick, we're going to pick up on this cryptocurrency discussion because every week that we don't talk about it, we get lambasted by the crypto bulls out there. So give us your sense. I mean, we also saw the Chinese central bank launching a digital yuan, and now obviously trying to get I suppose, a leg up on the digital trends out there, and trying to get a little bit of, I suppose, remove themselves from the US dollar as the traditional king of all currencies.
So, I mean, this conversation, well, the crypto talk is certainly not going away, and I think it's here to stay. And the idea of a digitalized sort of currency, I mean, I think it's fantastic. And the narrative that the fight back, the narrative of people saying, well, you know, the governments will never allow it, only adds fuel to it. There's even more reason for people to push it. And I think also a lot of it is to do with the fact, Bronwyn, that with the money printing around the world, a lot of the new investors, call them millennials, whatever you want, they look at cryptos as maybe just getting away from that fiat money, where traditionally old people like myself would be buying gold. It seems like the digital gold is where they're going. So I like the idea, I like the reasoning behind it. I just can't get my head around the fact that I don't think that governments are going to sit by on the sideline and watch this thing run away. You know, they love regulation. We're in a world of over-regulation. And I think at some point we're going to see it. I don't know if it's going to be good or bad, but the whole intent of these cryptos is to be away from regulation. But nevertheless, here to stay. It's here for what's going to be around in the future, whether it's Dogecoin as a joke or Bitcoin as a leader, I don't know, but it's definitely here.
Nick, I want to stay with you on this one very briefly because I was getting my hair cut the other day by a very, very nice woman, but she's a hairdresser, very talented and very creative and everything. And she said in her she doesn't speak very good English and I don't speak any Dutch, but anyway, she said, Lindsay, I bought Ripple. And I thought that's fantastic because Galaxy Ripple, when I was living in the UK, was my favorite chocolate. And I thought, oh, well, fantastic. Have you got a spare bar that I can eat? And she said, no, I'm talking about Ripple. She bought Ripple on a Saturday morning for 250 euros worth, geared. And I said, well, how's it going? She said, well, it's now worth 580 euros. And this was on Tuesday. And I just think to myself, this is a red flag to me. What do you think?
Who's the question to, Lindsay?
To Nick. You think he's staying with Nick on this one?
Yeah, Nick.
Yeah.
Oh, okay. So yeah. I mean, isn't this reminiscence of the Shoeshine Boys in the 1920s? I mean, this is absolute classic. But I mean, the crypto bears would say this is an absolute warning sign. We're in peak speculation. Whereas the other side would probably say now it's becoming mainstream. I mean, if you've got your hairdresser talking about it, surely it's something to look at. But I tend to lean more on the fact that I think it's you know, things are stop. When I hear stories like this, like Dogecoin, for example, that Joanne mentioned, you know, it is starting to get very scary speculation.
But Mia, let's talk about how this features in your thinking, because you know, often when I look at crypto, I look at it and I think, well, I've missed the boat because it is so frothy, and I'm definitely too nervous to try anything like Dogecoin. But how do you view it? Because what if this is the future, and we have to work it into our portfolios?
Yes, I think the important thing is that, you know, when we make investment decisions, we try and make risk-adjusted investment decisions. So we try and, you know, make prudent investment decisions where we can actually place a value on the underlying instrument that we invest in. At this stage, it's very difficult for us to place a value on any of the cryptocurrencies. And as you say, you know, it's been running so hard. People have been making money. If you're not in yet, you feel like you're out. And it's a worrying trend that people feel like they've been left out and they try and jump on the bandwagon. And like Lindsay now mentioned, people are gearing themselves to do it. So they're not even doing it with their money. they're actually borrowing money to do it. And if anything goes wrong, then those people are going to burn their fingers. And my worry is not, that cryptocurrencies won't be around. Yes, they'll definitely be around. That's definitely the future and how we're going to probably proceed going forward. But the fact is that when you look at individuals and people with not a lot of money, or even people with a lot of money, taking massive gearing bets on these instruments that's so volatile, it's extremely risky. And, we know what happened in 2009 when we had a debt crisis worldwide. And, this is a worrying trend to see how people have actually started gearing themselves in the past year, with gearing increasing more than 50% just over the last 12 months. So that's a big number.
Yeah, Joanne, just continuing this theme now, because the one thing that has struck me over the last minute when Mia's been talking is that there are those red flags that I talked about. As a wealth manager, as you are, do you start to say to your clients, okay, let's be a little bit cautious? Or do your clients say, I don't care, I've got to go with the flow? It's a very difficult situation for yourself, for Nick, and for Mia. It's a juggling act you have to do.
It is a juggling act, because what central banks have done for the last 10 years is make money worthless. So I love this concept. You put your money into less risky assets. Let's put your money into cash. Well, when it's going backwards, is that less risky? That's the first point. But back to how we're managing client expectations, a lot of our clients are about capital preservation. So interesting enough, they're not all saying, please put everything on red. That they want their money to grow in the long run, but we're not there to make them rich. We're there to keep them rich. And I think it's a very big difference. So when it comes to things like crypto, we're not saying don't invest. That's not what we're saying. And back to Mia's point, risk-adjusted returns are very important. But it also boils down to portfolio construction. So we're saying, look, we're not going to invest for you on crypto because we're not experts. We're not going to say to you no, but please don't put more than 1% of your wealth into this. So if you want to have a flutter, have some fun, there's huge FOMO out there on crypto, do it. But please, not more than 1%. And that's kind of advice we're giving right now.
And Nick, how do you deal with that fear of missing out? Because you must be hearing it from every quarter. Clients coming in and saying, listen, we might be missing the boat completely here.
Yeah, it's not every call. It's literally every morning, Bronwyn, that we get a phone call. I get a phone call once a day about Bitcoins. So I think it is also about just for us as brokers or money managers, it's like, I don't have a view on it. Honestly, I don't know if Bitcoin is going to be at $100,000 tomorrow, at $5,000. I have no clue. But I think the trick we've got to balance is we have to facilitate the trading of it if they want it. If they want to own it, how do you do it? Where it gets a little bit tricky is that from holding Bitcoins, the digital wallets, and of course these things are unregulated as well, completely unregulated. So going back to Mia and Joanne's point, if something goes wrong, well, there's no one to turn to. This is the Wild West stuff, and it's actually quite interesting because I had an email from a client yesterday who's a charity, and they said they've been offered. They're based in Cape Town, and they've been offered Bitcoin donations as a charity. So what do I think about it? So I said, why not? I mean, if a Bitcoin's worth, $65,000 and someone's wanting to donate it, go for it, absolutely. But after a little bit of research, it's such a gray area. You start delving into like, what does the SARB think about it? What is it? How do you calculate it for? How do you tax it? Is it capital gains tax? Is it a donation? Is a crypto, can it be donated? So like a lot of these things, a lot of these investments we deal with, it's the back end and the regulatory issues that I think is going to decide where we go in the future.
Lindsay, I just want to make one more point on the back of this. I mean, if you think about Steinhoff, so, here we are talking about a strategic share that people would have bought and accumulated year after year. But to your point, Nick, actually, when things went horribly wrong, there was nobody to turn to for shareholders, Mia. And then Lindsay, you can pick it up again.
That's the big thing, if you, as Joanne also said, if you want to dabble in Bitcoin or whatever you want to call it, it's difficult to call it investing. Something that volatile is very difficult to call investing because you can't place a a value on it, really, because it's impossible. It's just running all the way. So the thing is, if you want to invest in anything that's unregulated, you need to know that that money could be lost to you forever. So as Joanne said, most of our clients also are much more cautious investors, and they don't want to invest in anything where they've got a wild ride, where they have sleepless nights. They want to preserve their wealth, and they want to grow it steadily and responsibly. So yes, it's a difficult one.
Was an anomaly?
We recommend, no, definitely not, because bad management and corruption is not an anomaly. It's something we see worldwide. So I think you need to be cognizant of what you invest in. You need to know and understand it.
Okay, on this theme now, I'm looking at Joanne's background there, and it's like a green square, right? You can all see that. It's a green square. Now, there's something that's come to the fore in the last few days called NFTs, non-fungible, what is it?
Nifty.
Tokens.
Lingo.
Non-fungible tokens. Now, a non-fungible token is a digital piece of art. Okay, and now, Joanne, I think you could possibly sell what's behind you now for £1.4 million or $1.8 million. It's a piece of digital art. And this, to me, tells me that something's going wrong here. And the other thing is, on that theme, is smelly shoes from 2008. Now, Kanye West's shoes are up for auction. He wore them at the Grammys in 2008. And they're second-hand tackies, as you say in South Africa, trainers, as we say over here. They're up for auction for $1 million US. This tells me that if someone is willing to pay $1 million for a pair of smelly shoes, and for something that is similar to Joanne's background, but which is just grey, it's a single pixel piece of digital art, then something is going wrong. And Joanne, I think I have to go to you on this one.
Something is definitely going wrong. I just wish I could be the person to sell a piece of green art and make $1.5 million, but that's another story in itself. You know, you talk about smelly shoes and you talk about digital art, and for the life of me, I don't understand it. But kind of getting back to the stock market again, have you guys ever heard of a company called Hometown International? It's listed in the US. I've never heard of it before. It has a market cap of $100 million. Okay, so not in the billions, $100 million. Its turnover for the last 2 years has been $10,000. We are seeing ridiculous stories everywhere. So back to looking after clients and their money, one can't ignore these warning signs. We got them in 99, 2000 as well. Do you remember lastminute.com? Do you remember AOL Time Warner? Do you remember selling websites that had no value? I mean, crypto for me feels a bit like that right now. But there are massive warning signs. Why has it happened? Because central banks have printed money as if money is not worth money anymore. And so this is why we're getting these ridiculous anomalies. The problem we've got as investment professionals is bubbles are great when you're in them. You just have to get out fast. And that's the tricky part, because I think we're going to get a lot more stories like this. I don't think it's over yet.
And Mia, I want to come back to your thesis and the warning signs as we're talking about here. How do you ignore them? So, you know, Nick saying that his clients are phoning every day, one call a day around Bitcoin. How do you pacify those people who do think that they are missing out?
So it's a conversation you need to have with them. And I think Joanne summed it up beautifully. If you start to have these discussions with them and give them the context, which is a big thing. You know, people can get swayed by the media, they can get swayed by emotions. But when you bring everything back into context, it makes the picture a little bit clearer for them. And as soon as they see that, they reconsider their decisions, especially when they hear about things that they probably not focused on in the first place, as regulations. Is this regulated? How will it be dealt with? How will I be taxed on this, etc.? People don't like uncertainty, and they don't, when they become aware of these uncertainties, yes, they either take a gamble and hope they get out soon enough, or think it's going to go on forever. And we try and just give them context and keep it simple. So we manage what we can for them, but that's definitely not part of what we manage for them.
Lindsay,
Go on, Bronwyn.
tell you that this is going to be the best performing video. So we put out a video on the Nielsen Network at the beginning of April, a documentary on Ghana, which has done incredibly well. We're sitting at the moment at about 40,000 views, and it's shooting the lights out in terms of our YouTube platform. I'm going to take a bet with you all today that this discussion is going to become the top performing video on our YouTube platform. So just wait for it and watch the interaction that's going to come on this discussion.
Okay, I'm just going to do one more thing, and Nick and I can close it because we're outnumbered by women today.
So I don't know, did you pay for your haircut, Lindsay?
In crypto.
No,
it's received rave reviews, Nick. Thank you very much. Just because you're a short-haired sort of oak, doesn't mean to say that I have to be I have to be the same. But Nick, let's leave it with you, because when I look at the conversations that we've had this morning rather, I look at there's the champagne and cocktail side of the market at the moment with the cryptocurrencies and the fancy shoes and everything else and the ripples. But on the other hand, you've got the flat English warm beer, which is good and solid and reliable, and we've been used to it. You go to the pub and you have that, and you know you can rely on it, and it's part of your life. Whereas these cocktails and these glasses of champagne come in and out of your life. So again, how do you balance it as a fund manager?
Well, I think balancing act is firstly, I mean, every client is different, but from an asset management point of view, managing money, you know, your investments should be considered long term. You don't want to look at the sort of the front end noise and the FOMO stuff that's happening now. You need to look through that. And I guess, I mean, that's the difficult part. If I had to sum up now where we now with the investment cycle, I would probably say, you know, you make a lot of money as has been pointed out in bubbles. But you want, if you're going to be dancing as Chuck Prince says and the music stops, you want to be pretty close to that door. And I think the decision for all of us managing money now, and we're all probably fully invested, our clients are fully invested, I think the next conversation to have is actually when do you start exiting? And when I hear stories and conversation we have now with digital fungible tokens and the like, I suspect we're getting pretty close to that door.
So we've hijacked the conversation with crypto. Mia, I do just want to get a closing commentary from you and from Joanne, just in terms of other themes that you've seen this week that we need to take into account, just to wrap up. What a week.
Yes, I think, you know, I spoke about the vaccine, and the fact is that when you consider all these the noise that we're seeing in the media, people taking things out of context, you just need to bring all the side effects that you could get from a vaccine into context. And I put that down on Twitter. And the fact is, if you consider the 290,000 people in South Africa that's been vaccinated with the Johnson & Johnson vaccine, and you take the efficacy rate of the blood clots, if it's even related, then you'd have a quarter of a person having a blood clot probably. But if they all got COVID and they weren't vaccinated, we could have had 10,000 people die. So that's the context, and we need to consider that. And I think when you listen to Fauci, he's also talking about that, and I hope that we can see the vaccine reinstated soon.
And I see
you're a skeptic. Sorry, Bronwyn, I have to bring in Joanne now because she's a skeptic. She doesn't like masks. She doesn't like vaccines. She thinks the economy should be opened up. There shouldn't be any lockdowns, and I disagree with her fundamentally. But Joanne, just to end the show before Bronwyn gives us the outro, because I did the intro, tell us what your thoughts are, given what Mia's just said.
Are you in trouble again, Lindsay? Are you doing this again? I prefer to think I'm a critical thinker, and I don't like it when governments tell me what to do, when some of them have no idea what they're doing. But that's a whole new subject. So let's get back to markets and what we're doing with clients. I think markets are getting a bit frothy. There's no doubt about it. I'm not clever enough to call the top. I'm just not. So what do I do in that? I have diversification. That's the only way I can protect clients' money. So we have money in emerging markets. We have money in growth shares. We have money in value shares. And we don't, despite the euphoria right now, have all our money in South Africa. Because while I admit that South Africa has got better, I still think there's better opportunities offshore. And I think sort of Europe and the UK are exciting. And the rand at these current levels, yes, it could go to 13.50, but I think it's a great entry point to take your money out.
Joanne, Baynham. We've been joined by Mia Kruger, Nick Kunze, and Lindsay Williams, our gracious co-host from strictlybusinesspodcast.com. Thanks very much for joining us for What a Week.